Hi, good morning, traders. Excuse me. Good morning, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Lee, what's happening? Lee said no music at the break. Come on, I came for the Barry Manilow tunes. Well, I may not be able to sing Barry Manilow, but man, I got a whole lot. I have a whole plethora of songs that I can sing for you. If you really want me to do that at 4 o'clock in the morning, I'll do it. Damn it. It is 4 o'clock, 4:30 in the morning, and I can sing a Smurf song like it's nobody's business. But I'm not going to go there just yet because it's 4 o'clock in the morning. Okay, so I got the bias chart up, and we're ready to go here. And let's start off with the euro dollar, and let's get to it. So here's the euro, and okay, so yesterday, if you recall the lunch money webinar, we were right here, and I said, I think we are forming a triangle. If you were on the lunch money webinar, you probably remember this. I said we were up at, I was short the euro dollar, and we hit the 618. And by the way, Paul Franco called it like an animal yesterday. I didn't think we'd make it up to the 618. I think my cost average short in the euro dollar was at 112.88 or 89 or something. I got out of the euro dollar for just a small gain yesterday. I really mistimed my entry yesterday, but I did get out. He called it perfectly. I mean, not perfectly. He said 113.30. I did not think we were going to make it up there. I thought we were going to stall at this 113.10 level yesterday, if you guys recall. I thought we would stop here. We did not, and we rallied a little bit. And then yesterday in the lunch money webinar, I said, hey, we're up here at resistance. I think is resistance. I think we're forming a triangle, and I think we're going to form in this triangle ahead of the FOMC, and we're going to consolidate for the next 12 hours. And basically, we have done that. We are consolidating in the triangle. Yeah, I might have been off by a couple of pips here, but we're consolidating in this triangle ahead of the FOMC. And I'm assuming we're going to be in a tight range. So here's the thing for today. It's to me, it's going to be pretty simple here. We're going to look at these two levels. Okay, that is going to be a break above 113.40 or a break below 112.75, and that's it. I mean, it's pretty clear to me. 112.75 or resistance 113. Did I say 1340? 1340. 1340, and we're going to get a breakout, hopefully today. And I'm assuming that today, whatever happens today is going to set the pace for the next couple of days. I mean, like if we rally past this resistance, it's a dovish FOMC. We're going to rally back up towards resistance and probably look for some reversal up there. If we get a dip, here, we're probably going to do this. This is what I see post FOMC. We're probably going to do something like yay, or maybe yay, yay, something like this. Something like that. I'm just roughly okay. All right. And you know what? Let the market prove to you which direction we're going to go. I mean, yes, I am long some dollars. I will not deny I'm long some dollars. I'm long the dollar Canadian. I'm long the dollar Swiss. I'm long the US dollar Mexican peso. I'm long some dollars. Okay. My Swissy is my large position, but you guys already know that, and you know the reasons why behind that decision. The Canadians half size position, the peso's a half size position. There, I'm not even really worried about those too much. Um, really, I'm not. But it's more my Swissy, but sorry. But the Swissy is, my cost average is at 96.20, so I don't, I'm not sweating that. It's not, I'm sitting up on 100 pips, and I think eventually it'll be trading above parity. So I'm not really, worried about that. Even if we get a 50, 60 pip pullback in the dollar Swiss, it'd be viewed as an opportunity to buy it, I think. But anyway, as far as like trading the euro or the pound, or the Aussie, the Kiwi, the Swedish krona right now, I'm going to let the market tell me what I've got to do. Okay, and right now this is what I'm looking at. A break above or below. I think we're going to have a couple of days of directional movement. Okay, all right. So that's what I'm looking for with the euro. So we've got that. We've got that down. Let's go over to the pound. So the pound still very, very strong here. We have broken out of this, you can call it an inverted head and shoulder pattern. You can call it a triangle, whatever you want to call it. It's still giving us a bullish, good bullish breakout. There's a shoulder, head, shoulder. We've been staring at that for the last month. Or if it's a triangle, regardless, we're coming up to some key resistance here. You can see that resistance right there. It's really, really big. Okay. Now, it's also happens to coincide with 127% extension, or really close to anyway, of the shoulder, the right shoulder, if it is a head and shoulder pattern, that comes up right at the same prices, which we're going to write down major resistance at 146.70. Major resistance. Okay. We're attempting a bullish breakout with the cable. Okay. And right now, the pound, even I saw a vote yesterday that was leaning towards leave versus stay, and it's still, it's the pound is still holding up really well. Okay, so what that suggests to me is dips are, being bought. I mean, dips are being bought, and they're being aggressively bought. So I really think that the market was aggressively short the cable this last month, thinking that there was going to be the UK was going to vote to leave, and I think that was more of the what the market was looking, what the market was positioned for, and people are starting to figure out, as we already knew, hence being short the euro pound, that when push comes to shove, it's going to be real difficult to get people to vote to get the UK to leave the EU. And I think the market is coming to that realization that it's not going to be as easy as people thought it was more of a slam dunk. Oh, look, the UK is going to leave the EU. But that was the same thought that they had during the Irish referendum as well. So anyway, I think dips are going to be fairly shallow. But if we break 145 in the cable, let me set my coffee down. 145. Okay. If we break this, then we're going to start a much deeper pullback. Okay. And that would be, obviously with a pretty hawkish Fed in order for that to happen. Then we might pull back towards, this breakout point here, which will take us down to roughly down to there. Okay. But the cable still looks, pretty strong. And I wouldn't stand in front of the pound. I am long the pound right now. not the pound dollar, but I'm short the euro pound and I'm long the pound New Zealand. All right. I would not stand in front of the cable right now. Not yet. It still looks pretty damn bullish. All right, let's go over to the Swissy. Now here's the Swissy. Swissy's, yesterday we talked about a dip to 97 cents. You guys remember that? I actually added to my Swissy yesterday, guys. We said, hey, if the Swissy dips to 97 cents, and I drew it out for you. We're here. I said, if it dips to 97 cents, that's going to be a great opportunity to get long. It dipped to 97. Oh, it was a low. 97.02? 97.01. Not bad. We dipped to 97.01 and boom. Now, this is still, in my opinion, pretty good support here. So right now, 96.85. Is support. Resistance. Oh, I'll tell you what. Here, I'm going to delete this right now. Well, actually, you know what? You know what we're going to write down? Resistance is right here, and it's futile. Resistance is going to be these highs at 97.96, so it'll be 98 cents. That is major resistance. We're still in a range. Okay. Let's go over to the yen. So the yen. I mentioned this yesterday, and I'm going to say it again. I like the yen. I like the dollar yen, and I like it on the long side. I don't necessarily like it on the long side right at this moment in time, but I think I've come to the conclusion that this head and shoulder pattern has pretty much run its course. So I want to be long the dollar yen. I just don't know when. What I'm really looking for, and everybody here should know this, and anybody who listens here normally, what I'm really looking for is I'm looking for the dollar yen to start performing well when stocks come down. So in other words, if the stock market comes under some pressure over the course of the next, like let's say, the next couple weeks to month, like let's say, we have, sell in May, go away, summer doldrums coming, people start laying into the equity markets, and we get a 5, 6, 10%, pullback in equities for the summer. When or if that happens to equity markets, what I'm looking for is I'm looking for the dollar yen to pull back, and if the dollar yen pulls back, I want to see if it's limited or not. If we have a limited pullback when stocks come down, I'm going to start getting aggressively long the dollar yen. Okay, that what that really means is I'm going to start buying the dollar yen. But it ain't going to be like today, and it ain't going to be tomorrow, and it's probably not going to be 2 weeks from now. I'm talking like here in the next few weeks. I'm really looking at buying the dollar yen. Whether it's at 106, 105, 108, I don't know. I don't know, but I am now starting to look at the dollar yen as a long opportunity. Now maybe I won't even get the opportunity. Maybe it just rallies to 116 and there's nothing I can do about it. I don't know. But I am starting to look at it and think that I do want to be on the long side at some point. Now, what happened? That has nothing to do with what's happening today, by the way. That has everything to do with what's happening over the course of the next few months. But what we'll look at for today, I guess, is going to be, dips to 110 should be pretty well supported, I would think. The reason why I say that is because dips to 110 should be fairly well supported. Okay. Uh, but resistance to 112, I'm not too sure if that's going to hold or not, but I'd say we're kind of mid-range here. 110, 112. There's nothing to do with the dollar yen right now. I look at the dollar yen and I don't look at it and say, oh, I'm really getting ready to get long or really getting ready to get short here. I don't really have any desire to be trading the yen. And by the way, the BOJ does meet. Is it tonight? Yeah, BOJ meets tonight. Late tonight, tomorrow morning actually in Japan, but late tonight. So I will have more than likely no yen exposure going into tonight. I hope this all helps you guys. I'm for those of you that are relatively new, there's probably a big difference between what I do here on the Morning Edge for you and then what you're going to hear anywhere else. Um, you know, uh, no matter if you're at a paid webinar, which you're probably getting a lot less information when you pay for it, or you're at somebody else's webinar. I tell you guys what I'm going to do before I do it, and I hope you guys can appreciate that. See, what I'm doing is I'm planning my trades, and then I work my plan. I tell you guys what I'm thinking, what I'm planning to do, and unless something dramatically changes between now and then, like between now and you know the next time I see you, I'm probably going to be taking that trade that we talked about. Sometimes I forget, sometimes I oh, I'm going to borrow the dollar yen when it gets to 110, and then it gets to 110 and I'm busy trading the Aussie, so I'm not really thinking about it, and so I miss it. That does happen from time to time, but I hope most of you can appreciate the fact that I tell you guys what I'm going to do before I do it. Unlike when you go to you listen to other people and they're like, well, what are you, stupid? Well, of course I was shorting the euro when I hit 114.50 at the very top of the market. Of course I was short there. Why weren't you short there? You must be stupid or something. No, I'm going to tell you like a week or a day ahead of time, hey, I'm looking to short the euro dollar when it gets to 114.50. Sometimes it gets to there and sometimes it goes past, but I most of the time will trade what I say because I'm planning it. This webinar is not only conducted for you, but it's conducted for me. This is me working out through my own issues when I trade, and that's why it helps me to do these webinars, because it helps me get my thoughts straight for the day. All right. So anyway, hope you guys can appreciate that. So when I say, hey, I'm looking at the dollar yen and I'm telling you right now, I'm not really interested in trading the dollar yen right at this point in time. Doesn't mean you can't be, because I'm not here to tell you what to do. I'm here to give you my thoughts so they can be straight in my head, and hopefully they make enough sense to you where you can A, incorporate them into what you're doing, or B, at least go, okay, well, I know what Blake's thinking right now, and maybe it's not along the same lines that I'm thinking, but at least I know what his outlook is, and maybe it helps you tailor your thought processes as well. Okay, all right, enough about that. Let's go over to the Canadian. So here's the Canadian. I am long the dollar Canadian. I am out of the money 80 pips right now. I own it. My cost average is at 126.74. It's about a half size position. I'm not getting really aggressive here. I think I've said this enough times to where you guys know that on a break above 127.50, this red line right here, I am going to start getting rather aggressive. That's going to take the downside pressure off, and I think that that's where I really would like to be more long. Can we drift a little further in the dollar Canadian? Yeah, we're following this descending trend line, so it's very possible that we could make it down to 125.50 today. Very, very possible. Okay, that's why I'm not super excited about buying more of this, because I think we could even go a little further than we are right now. 127.50 or 127.60, whatever I've been writing down, is key. We are in a downtrend. I am trading counter trend right now. I am long in a downtrend. Let's go over to the weekly chart really quick. As you guys know, we're at a 38%, well, we're below. We're 60, 70 pips below the 38% retracement on a multi-year fib. And we're around the breakout point. Now, we are below by about 70 pips right now, but that doesn't surprise me. When you're looking at monthly or weekly charts, okay, you know, the monthly or weekly charts, we can overshoot prices by 100 pips easily and still be in the vicinity. Like, if we're sitting here just sub 126 right now, by the end of the week, if we're trading at 127 or 128 by the end of the week, I will tell you, hey, we held the 38% retracement on a weekly basis. Yeah, we overshot a little bit, but that's typical. It's not. If technical analysis was perfect to the number, to the pip, your life and my life would be a whole hell of a lot easier. Trading would be, dude, it'd be like raining money if everything was just perfect. But unfortunately, the markets are far from perfect. They're very imperfect, and so you are going to get a lot of overshoots. You're going to get a lot of around theirs, and you have to roll with it. And if you can't, and if you come to the market thinking that everything has to be perfect to the T, to the pip, you're going to be sorely mistaken, and you're going to get your ass handed to you. So, you know, we are around the 38% retracement on a weekly and monthly basis. We are consolidating here. All right. Yes, we're a little bit below right now, but realistically, we're here. Now, if we were trading at 124, I would say, okay, we're really breaking this 38% retracement. But right now, no, we're just kind of hanging around here. You can see it in the daily chart. I mean, we're just kind of, I don't like how we're just kind of meandering down here, but that's probably more of a function of strong crude oil at the moment. All right. All right, when I come back, we'll do the Aussie and the key. I'm taking my sweet ass time, and which is fine, because it's FOMC day. We gotta talk through these issues. I'll be back in a few minutes. Don't go anywhere. When I come back, we'll do the Aussie Kiwi dollar index, Nordic currencies, peso. Be right back. Thanks. All right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to continue on here. The euro's dipping below 113 right now. Aussie just hit new lows. Kiwi's at lows of the day. Swissy's starting to bid up a little bit. Just a little heads up. You know, not anything super exciting happening right now. Just want to let you know that things are moving a little bit here. Aussie new lows again. Wow. Jeez. Man, seriously. All right. Let's go over to. Speaking of which, let's get over to the Kiwi. All right. So here's the Kiwi dollar, and the Kiwi is approaching some pretty key support here. We are in. I want to start off. Actually, let me remove this. I want to start off with the weekly chart, just so you guys see. This is a nasty weekly candle. It's nasty for a couple of reasons. It's definitely Janet Jackson nasty. You know, you got the false breakout. Okay, false breakout last week. Shooting star, real big reversal candle. Like I said yesterday, you just want to sell into rallies, and you know, that worked really well yesterday. We rallied yesterday. We sold into that strength, and you know, made a Made a handsome little profit in the Kiwi dollar, twice actually. It is approaching support. Okay, we're now approaching support. Now you could arguably say that this is a head and shoulder pattern. We are, ultimately in a big downtrend, but if you look over the last, well, this year basically, this year we have been trending higher. The one thing I don't like about these types of head and shoulder patterns, this is just a personal preference, not necessarily written in stone, is that when you have a head and shoulder that looks like this, I like to have an arm, okay, that you can retrace to. So when you get breakdown, you can retrace a certain amount of this move, this move. We don't have that, but it technically is still a head and shoulder pattern. It's just not my favorite looking head and shoulder pattern, if you will. What that also means is this the support here is pretty key. I think it's a 786 retracement, if I'm not mistaken. So let's I think we just had it up. Let's do that. Yeah, there's your 786 there. So 68.20 is really key, right? That's key. Let's just assume today we break through that, because it's so close. I have to make that assumption. That means that this 67.60, actually that's what we should put down as key. 67.60 is key. Let's get rid of that. Let's go. Oops, that's not what I want to do. 0.6760, that's key. Okay, support. All right. Resistance. Resistance is 69 cents. And we went from being bullish, but last week we had to go back into a range because of that really crappy weekly candle. Well, it's not crappy. I mean, it's crappy if you're bullish, but it was a really nice false breakout, actually, for those of us that are short Kiwi dollars, which I happen to be. I'm short being long the Aussie New Zealand and long the pound New Zealand. I am short the Kiwi dollar by default, but I'm just not short the Kiwi US dollar anymore as of last night. Okay, Aussie. Here's the Aussie. Things getting crushed. I mean, I don't even know what to say here. I mean, we had a real nasty, Janet Jackson nasty weekly candle with the Aussie. It was also a false break, as you guys know, right? False breakout, reversal. I mean, next key support comes in at here at 75 cents. Oops, damn it, I didn't want to do that. Right here. $74.80. Came out of an ascending wedge a couple different ways. Yeah, we're straight up just breaking down. I mean, I don't even know where support is at this point. We're at a 24% retracement right now. That should stall us right now from this low. 38% retracement comes in right there. So, I mean, our next support comes in, unfortunately, it's not till 74.80. So where is it that we can short the Aussie from? I think that any rally now back to 77 cents will be looked at as a selling opportunity. And that's the hope. Like, I hope we have a dovish Fed today, and I hope we rally back to 77 cents because that is where I hope to get short the Aussie because I am not short currently. Okay. We're in a range. Dollar index. Okay. So your dollar index. All we're doing is retesting this trend line. So this is going to be really important support today. Let's just grab this. Let's do it like this. No. Let's go like this. It's going to be really, really key support here. That's at 94.15, whatever that low is. It's 94.20. Okay. Key support. Resistance, well, it's at 95.20. I don't think we're going to make it up there today, but you never know. I mean, it is FOMC day, so you never can tell with these things. That would be key resistance, and we are in a range. Okay, let's go look at the peso. I think yesterday we wrote down 1737. We went as low as 1735, so we're just probing, you know. So let's go into low, high, 618. So 1735 is important support. This is actually a pretty key support. 1735 coincides with that 618, and resistance would be back at 17. Well, it's actually 17. We had 1760 written down, but it's now, because we overshot a little bit, 1763. Okay, there's your range. US dollar, Norwegian krona. Let's get rid of, I mean, that Garley's still there, but I mean, we got our bounce from the Garley, so we can just delete this stuff. Hold on. I'll have to put that fib back in, but just trying to delete these lines. Okay. So you know what? I'm going to delete that. Everybody knows, or you should know anyway, this is really critical support down here. Well, actually, you know what? I was thinking the Swedish krona. Sorry, I was thinking the wrong thing. But this is 810 is really key support. 810, resistance is 830 still. I don't know if there's anything really to do here with the peso until we break one side or the other. $830 is critical on the way back up. Yeah, again, I keep waffling between being in a bearish trend or a range, but We'll just keep it there. Swedish krona. I am out of the Swedish krona right now. The only reason why I'm out of the Swedish krona right now is just to reduce risk. That was it. Strictly just out of it to reduce risk. All right. But as you guys know, we have major support here at 803. Major. I mean, I don't even know how to any more than I can explain that 8.03 is major support. Well, I put the multiple asterisks there. Okay. Resistance is at 818 still. So we have to breach 818 to take the downside pressure off. And if we break 818, that's going to start a squeeze. So we are in a range. We're just at the very low end of our range. And I do not, I repeat, I do not have any US dollar Swedish krona exposure anymore. I bought it here the other day. I sold it yesterday, like right here. I didn't make very much. It's more of a annoyance than anything. But if it breaks 818, that's going to be a pretty, it's going to start a squeeze back towards the mid-range. Okay, your bias chart is done. Go ahead and take a picture, and I'm going to take some questions.